Hey everybody, Economic Ninja here. I hope you're doing great. It's 2023. We made it. We made it through 2022. I know, it's crazy. Guys, we're gonna be talking about gold, the gold price, what some analysts are talking about as far as gold. We're gonna talk about gold shares and how they could be affected and all that kind of stuff. But I'm gonna be honest with you, it's super bright. So I'm gonna go ahead and just throw in the intro and then get some glasses on. Let's do this. That is so much better. All right, let's talk about the gold price. Look, I got a story out of Kitco right now, and they're talking about gold price pushing above $1,900 as the Fed remains behind the inflation curve in 2023. And I gotta be honest with you, I couldn't agree more. However, I think 1,900 could be a little, like they're holding back, to be honest with you. So if you look at it right now, the price of gold on a one-year basis is almost exactly where it started off in 2022. Literally, I think we're up like 1 or 2%, give or take, when this video comes out. So it really hasn't moved. You're like, well, Ninja, why would we do that? Well, first off, gold is not an investment. I look at it as insurance against uncertain times. And to say that these times are uncertain, well, that's an understatement. Quite frankly, the truth is, central banks all around the world, except for the Federal Reserve, because, they know everything. I don't think they know everything, are buying gold. They're buying gold at fever pitch. They are running around buying up as much gold as they can. As a matter of fact, in the last year, gold buying from central banks have been hitting certain records, certain milestones. Pretty epic. But you guys know that I'm involved I own precious metals. I physically hold them. I vault them. I also have leverage to those prices because I'm invested in gold mining stocks. Real quick, want to say a thank you to today's sponsor, which is Sanu Gold Corp. Their ticker on the OTC is SNGCF, and in Canada, it's SANU or Sanu. And you know how I remember that? It's like Mork and Mindy. Sanu. Sorry, I can't help myself. But anyway, we'll talk about the company in a little bit. Talking about the price of gold. Now, again, gold price hasn't moved a lot, but it did inside of 2022, in the beginning of the year, when the Federal Reserve announced that they were going to be raising interest rates. They took the gold price, from pretty much where it is now, around $1,800 an ounce, to literally topping right around $2,000 an ounce, okay? In that amount of time, gold equities were on fire. Stocks were moving up at a much greater percentage rate than to the price of gold. Now, there's obviously risks with all that too, okay? They're leveraged super high to the upside, obviously down to the downside as well. And when we saw the gold price start to sell off in the springtime of last year, along with the equity markets, that's why I want to make sure people understand that. When stock markets sold off, really around the world, but let's just talk about America, the paper price of gold and silver traded down. That is absolutely normal. However, there is a point in life or in investing when they diverge, where they separate the price of gold from the market. They still have volatility, but they start to expand, right? So if you think about it, that's why I invest in precious metals mining stocks, because I'm wanting to be ahead of the curve. With that being said, this isn't financial advice. I'm not a financial advisor. You obviously have to be well diversified and not throw a ton into any one given stock, okay? So it's very important. So let's talk about this story out of Kitco. It says gold price to push above 1,900 as the Fed remains behind the inflation curve in 2023. It says right here, the gold market has seen a solid end to 2022. And according to one research firm, its momentum in the fourth quarter should continue into 2023. That is correct. Literally in the last 4 to 5 months, we have seen 4 months, we have seen gold really start to tick up, especially as the dollar value in comparison to other currencies starts to fall, okay? The DXY has been falling, and it is looking like there's no end in sight, because most investors believe that the Federal Reserve is going to stop raising rates or severely restrict the rate of increase that they do, right? Which is going to bring less value to the dollar. See, what's bringing value to the dollar right now in the last year is the Federal Reserve raising rates. So you get some yield, you get something, which we all know if you go to the bank and put in your money in the savings account, it literally amounts to bubkiss? What's the right word? Nothing, right? But the point is that investors look at, oh, the dollar's got some value, so people want to hold dollars, thinking they're going to get some kind of rate of return, even though it's nowhere near inflation. Well, as the Federal Reserve starts to slow that rate of rise, the dollar value goes down and gold goes up, all right? It says right here, in its 2023 outlook, analysts at BCA said that they see gold prices pushing above $1,900 an ounce in the next year. The positive outlook comes as the firm started building a bullish position in November. Man, it just got dark in here. Woohoo! Actually, no, it's still bright enough to put sunglasses on. Says the research firm is bullish on gold as they expect a peak in the Federal Reserve's monetary policy, persistently high inflation, and global economic uncertainty to support prices through the new year. The evolution of gold prices next year will hinge on the Fed monetary policy and its impact on the USD's trajectory, the analyst said in the report. Given a backdrop of elevated uncertainty next year and a dovish Fed, which will weaken the USD, safe haven demand for gold will rise. I completely agree with their sentiment. And the reason why I say this is because the Federal Reserve knows it only has so much it can raise as far as the interest rates before it breaks the back of the economy. And the reason why that is because every time they raise their rates, all rates go up. Bond rates go up. Mortgage rates go up. Credit card rates go up. Private loans and corporate loans go up. So at a certain point, no one's going to be able to borrow money because it gets too expensive, all right? So that's why I believe the price of gold is going to go higher, because the Fed can't keep raising rates. Now, with that being said, I actually believe they're going to keep raising rates. It's going to break the back of the economy, which still is going to be good for gold. So let's go into today's sponsor, Senu Gold Corp. This is a company out of Guinea, and they have 3 projects. Now, you guys know that when I'm investing in a company, I want to use this company as an example. I like to see resource companies have more than one project. They have to be diversified. Like we talk about being diversified in your portfolios, a metals resource company needs to be diversified in its portfolio of properties that it is drilling on, because what if one doesn't hit? What if one does? You know what I mean? You want to be able to diversify your portfolio, not only of stocks, but also when you're talking about companies, their diversification on their portfolio of properties, all right? So they have 3 projects in Guinea, and you guys know how the ninja pronounces words. So we're gonna try our best here. Number 1, Dania. I think that was pretty easy. Dania. The second project, Diguphoria? No, wait, hold on. I'm going to let you guys pronounce it in the comment section. Diguphoria. Man, the ninja and his pronunciations. And then the last one is Bantabai. That's what I'm going with. Google Translate didn't do it very well for me. Bantabai. Let me know in the comment sections what you guys think about those, but they have 3 projects. Now, they are located next to some large gold producers. To list 3 of them, Anglo Gold, Nord Gold, and Predictive Discovery. So that's always nice. When you have a property nearby large producing gold mining companies, you have a better shot. You know you're in the region, right? Now, they're currently under a drill program right now, and so we're going to be expecting results here, hopefully, soon. So they are actively drilling. They're located, like I said, in Guinea, and the region, the country has 25% of its GDP and 75% of its exports coming from the mining sector. So they take their mining sector very seriously. When you are that heavily weighted in mining, metals and mining, the government understands where its money comes from, where its taxes come from. So it takes these industries very seriously. So I do like that. Now, the Fraser Institute ranks Guinea as the 3rd best region in Africa in the mining investment sector as far as investment attractiveness. So they rank Guinea 3rd in all of Africa. I like that. Now, share structure. Talking about the share structure, some things that I'm always looking for is how much do the insiders own, how much of it is retail investors, and so on, right? And you guys know this is a small market cap, a micro cap, and you guys know that I want to be positioned in many different companies before this bull run. So I'm going to give them as an example of some things that I like. First off, 51% of the entire share structure is held by insider ownership. I like that. Another thing is 26% of the shares are owned by institutional ownership. 23% of the entire market cap right now is held by high net worth investors. Investors that are holding, they tend to hold for the longer term. They have been around the block. They made their money by being smart, not by being dumb. And so they are literally those type of investors that I like to see holding on to projects like this. In this case, Sanu Gold, 23% of the share structure is held by high net worth individuals. And then 5 to 10% around there, give or take, is retail investors. So the retail space has not moved into this. Now we're seeing that really across the board in the entire mining sector. Retail investors are still super transfixed on tech, which they're losing their butts on right now, and other sectors in the industry, what they're used to, like AMC theaters, because all they're doing is printing shares and not selling theater tickets. It absolutely blows my mind, but this is why this sector, the gold and silver mining sector, also lithium and all kinds of different natural resources, I'm wanting to get myself in now while everybody laughs at it, so then I can laugh when I'm selling it back to them at higher prices. Okay, so as far as the share price, right now in the US, we're sitting around 22 cents, give or take, when this video comes out, per share. And like I said, the OTC ticker for this is SNGCF. Fully diluted shares come in just a little bit above 63 million. I think it's like 63.6 million shares. And that gives it a total market cap of just under $13 million US. So again, very small market cap. The ability to move the needle is actually pretty easy on these smaller market caps as the company news comes out, as the news flow starts to flow with these drilling programs. Like I said, they're currently under a drilling program right now, so you're waiting to see what these drilling results are. And there's total different strategies to where investors invest prior to drill results or they wait till after. I'm going to be honest with you, I really like doing a mix of both, nibbling in on some stocks a little bit, getting to know the team, getting to know the entire project, and then weighing in a little bit more into strength. That's what I like to do. But I want to thank Sanu Gold for the sponsorship of today's video. Guys, I personally believe that in 2023, gold is going to go higher. And it is most important to hold physical gold. That is number one. But after that, and you have your nest egg built, to look at some of these mining stocks, I think are very valuable, and just to wade in little by little. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.